Welcome back to Trade Pro FX. Today is another amazing day. So if you are a returning subscriber, welcome back to the channel. And if you have not subscribed to this channel, kindly you are missing a lot. You have been missing a lot, so kindly subscribe, share, like and turn on your notification bell so that we do not upload any videos and you get left behind. So today we'll be discussing about the Bollinger Bands indicator, and this Bollinger Bands indicator is one of the most powerful indicators that are normally used to trade the breakout reversals and the pullbacks, and I will be here to show you how to use this indicator. So stay tuned with me here, watch the entire video without skipping anything, and in case you have any questions you can comment on this video below. So I will be illustrating some examples of what we will be checking on these trades. So number one is how to know these breakouts, the trade breakouts. So let me pick these so let me zoom out very well so that I can spot for you a certain breakout here that we go step by step as you understand what I'm talking about. This area within this zone there is a breakout showing that the candlesticks being formed there are bullish candlesticks showing the green candlestick and are on the upper band. You can see it's tapping, those candlesticks are tapping the upper band of the Bollinger Bands. So we will be discussing how to enter trades using such kind of breakouts. Number two, let's talk about the breakout reversals. This here is a breakout reversal. Look at it, it appears below the Bollinger Bands lower band. So we have to be very careful while looking at such trades. So then we have another setup here. We want to look at a pullback, and a pullback normally appears nearer the median line, which is the yellow line. So as you can see, we have three lines there. So we want to focus on this line here, and you see that now acts like a pullback and the market reacts from there. So basically today's topic, we will now be checking the breakout, the pullback and the reversals. Until there, I hope we are good. So whenever you get such kind of the setups like the breakout, the pullbacks or reversals, when you get such kind of a pullback, that's an entry. You can identify that as an entry on that point and take a bullish trend. So guys, basically stay tuned. So we will be talking how to get the high quality trade entries like this, and by the end of this video you will become an expert on trading using the Bollinger Bands indicator. And therefore, as I've said, stay and watch the entire video without skipping anything. So after there, let's now talk about the basics. I want us to just talk about the basics of this indicator, which is called the Bollinger Bands. Number one, you have to understand the volatility. That's the key thing. Number one, we have to understand the concept of the volatility and how it can be seen through this Bollinger Bands indicator. And then the next we will look at three of what setups I've told you. Those three setups: the breakout, and the breakout reversals and the pullback. So within these three simple setups, if you are serious about taking your trading to the next level, you must listen very carefully how to use these three simple setups: the breakouts, the reversals and these pullbacks. And I'm very sure by the end of this video you will have a comprehensive guide about the trading concept. So with that, with that, if you have not subscribed to the YouTube channel, kindly do so. You can see this is Trade Pro FX. Don't forget to get any comprehensive trading courses. I've taught them there, so just type your trading Trade Pro FX and you will get very many concepts. Let's now embark on the journey of the trading mastery of today. And with that being said, about the Bollinger Bands, this one, you see I've already put it inside. Now with this Bollinger Bands, there is something I want us to talk about directly, which is the volatility. When you hear someone talk about what is volatility, or kindly look at the markets, when you just generally hear about what is volatility. Number one, this volatility, this is an indicator that shows is based on it is a volatility based indicator. Therefore you need to understand it, and we must understand the concept of volatility in very simple terms. And what is this concept of volatility in simple terms? We say that volatility, number one, we talk and say that volatility can be defined as the speed at which the price moves. I hope we are together with that. What do we talk about? What is volatility? We talk about volatility when we talk about that it is defined as the speed at which the price moves. Until there, I hope we have grasped. Whenever you hear someone ask about what is volatility, just basically know it is the price, the speed at which the market is moving. Now just let's look at this kind of setup here on this rectangular where I've drawn. So I want us to talk about that volatility. So we have such kind of consolidation. Until that point, I want you to look at this setup here. This setup shows a consolidation area, where this consolidation now shows you that the market is not moving at a very high speed. It moves at a low volatility speed. So we have this area there which acts as a consolidation, and that now shows that the prices does not move at it moves at a constant speed, that is. And then we have this setup here above. This setup above there shows that that's a high speed. It shows a high speed that now becomes a high volatility section where the market has gone. We can see other one like this one, that's a high volatility. We can spot that. So any point you see the volatility moves at a very high speed, it shows a high volatility environment. And then any point you see a market just consolidate like this area, you just know it shows a low volatility environment, and the price takes a long time to cover a certain price distance. As you can see it covers a long time. So small prices swings, like you see at these areas. Let me pick here. There are areas, just look at this point there. At that point, that's the area I'm talking about, low volatility. Let's back on this area again. It shows there was some low volatility, meaning the movement was not as much as moving upwards. Until there, I hope we are together. On that concept. I hope we have understood first what that in terms of volatility. So let's now basically look at the candlestick like this one. Looking at that red candlestick there, or this green candlestick here, this candlestick green with you can see it shows that there is very low momentum of those candlesticks, showing volatility environments. And usually these we call this consolidation, we call them sideways or a range bound markets. So whenever you just see a market consolidating or showing low volatility, we call that sideways or a range bound market. So during this such times, it can be very difficult to trade, guys. It can be very difficult to trade because the price does not move much, however, but the price is organized and unpredictable at a certain extent. So let's now look at these movements, which are the higher movements moving at a very high speed, these high volatility environments. You can see during these such times the prices moves in a quick and rapid manner compared to this. So looking at these, the higher volatility setups like the above, you can see that the speed of that market was very fast. And when we consider that, these are usually trending markets. So whenever you spot this market and you moving at these swing lows, these one are swing lows, it makes swing lows and moving higher. So basically, when you see such kind of trending markets, it can be easy to trade, and at the same time it is very easy to exit. So it shows, number one, that they are aggressive. This is the area you should now trade. When you see these trending markets, this is the area now you should trade aggressively. And in such markets is because the price can go wild in any direction. Therefore, when you spot these trending markets, it shows now that you should be aggressive while trading. But on the other consolidation areas showing low volatility, do not you should just be a conservative on this area. You should be conservative trader. You should be a conservative trader on these sections. On those low volatility sections, just be a conservative trader. But on this trending market, be an aggressive trader. I hope until there we are good enough to understand what the meaning of volatility and all what I've been talking about. So for a trading market, be an aggressive trader. For a consolidation or a sideways market, become a conservative trader. So basically now, let's now ask ourselves, what is this volatility? How now do we use these Bollinger Bands to know whether the market is volatile? So this Bollinger Bands indicator, let's first erase everything so I can show you how to get into this. So now what is or where do we know that now there is aggressive time to trade? So that's where now the Bollinger Bands come in. So this area, this is the point now the use of the Bollinger Bands is helpful to now get where the aggressive trader should trade, or where a person should just be a conservative trader. Let's now look at go dive into these Bollinger Bands exactly. We have 3 lines shown on the Bollinger Bands. This one, the first one, the second one, and the third one. So just let's look now on the settings of these Bollinger Bands, and you will note that the setting is set to 20 periods, and we have 2 deviations on the upper and the lower. You can see this is 20 and 2 multiple 2 standard deviations on the setting, and the mid one, this one is simple 20 period moving average, and the upper, let me return it. So the upper band, leave alone this one. This is the medium line, the period 20. The upper one and the mid one, when we talk about these two, The upper band is calculated by adding two standard deviations to the middle line, similarly to the lower band end, which is calculated by subtracting two standard deviations on the middle line. During this low volatility, we see that the bands are extremely narrow. So just look at these marks, areas I'm marking. It shows the Bollinger Bands shows very narrow and shows the market is moving sideways. So like that area shows the market is moving sideways and the price keeps on bouncing back from the upper band and the lower band. So looking at maybe like this area again, we can see that the price stays within the bands mostly of the time when the prices crosses above, and then immediately the price reverses downwards. Similarly, when the price crosses on the lower, immediately it reverses up during these times. So now let's check. After we are done, you can see those, as I've said, it moves up, then returns back. Let's now check for the higher volatility how the bands go. So looking at the higher volatility, the bands go wide and the price extremely moves near the upper band. You can see, and whenever the lower band in a move, the price will stay near. You can see the price stays near and around the upper band as the price may close a few candles above it, like the area you see I've shown you there. So let me show another point. Looking at the lower one here, the same thing happens. It stays around the lower band and a few candlesticks can close below it. Now with that said, when now should you avoid to trade? Avoid to trade whenever you see these narrow areas like this one. That's the consolidation areas. Avoid to trade on those areas. Another place is this area here, which is showing a narrow area. And when should you trade? Take trades, sure trades, whenever you identify a breakout. Let me show you like this breakout. Whenever you see a breakout and there is a wide section shown on the Bollinger Bands, you see a breakout, and then like that point you can see there is a breakout on this area. We first had a consolidation, we have then that one, the candlestick broke up, showing a bullish candlestick. So that's the area you pick your trades. Shows a large or a wide Bollinger Bands area, and you can trade and pick a good setup trade for bullish when you see such kind of breakout. And the opposite for a bearish, you first spot that consolidation with the narrow section of the Bollinger Bands, and then wait for a breakout, and you can pick your trade to the downside. So let's see from here. You can see this area here. There is a very good consolidation. When the market moves up, moves down, it touches up and down, then suddenly we see a breakout. So on this area you can just place your support. Now that becomes your support, that area where the market is kind of consolidating. So on that area becomes your support, and whenever the market breaks that point, and you can see at this area the market broke at that using this candlestick showing, after that it started showing good momentum downtrend candlesticks. This area will be a good trade setup for you after you have seen that breakout. So basically you just look for a breakout after you identify when you identify that you can spot an area we had a very good consolidation, and then there is a breakout, you can pick. You can just look at this point. The area on our right was our support, and you can see the same area on this point was our support. So you see that was a support, and going back to this area became our support. So the market normally obeys those key things. You see such kind of a setup, and the market has consolidated so much, and then there is a breakout, you pick the trade. You can see This was a setup, was a consolidation area when the market was moving up and down, touching the Bollinger Bands, and then it became wider, and that was the breakout candlestick, showing a good momentum candlestick, and we went up very well.